I mean, first and foremost, price is controlled in the futures market. And the big decline in gold and silver futures over the past few weeks was, I think, a realization by the traders that there was, I guess you could say, a sense of people being gullible enough to believe that the Trump administration would halt the upward trajectory of spending, that inflation would be reined in, that the markets would go up eternally because of the Trump trade. And he may be good. And let's just call it what it is. I'm very happy that Trump was elected, and I hope we get a good portion of our culture back. I think people were optimistic. And so the decline in the futures is, I think the traders started the paper price down, and it started hitting stop after stop after stop as the hedge funds covered, or sold rather. It allowed the commercials to cover. They covered almost 16,000 gold contracts. They covered almost 6,000 silver contracts at 5,000 ounces apiece. It's a lot. So the traders took advantage. They've been getting destroyed over the last several months with the rise in gold and silver. There's still almost 200,000 contracts short on COMEX in gold, and about 33,000 short in silver. So they still have large short positions, and every dollar up in gold and silver, they were getting hammered. They used this as an opportunity to kind of level off their balance sheet. But here again, much like we've seen for the last several years, these corrections are very shallow and they come right back up. And that's because the rest of the world knows we're in a pinch. And they use these opportunities where the paper price is smashed down to buy and to take possession and take delivery of. And I think it speaks to the real demand for gold and silver. And we're not even talking physical in retail. We're talking on a much broader basis. The biggest money in the world understands that. I think that this is a transition period away from things like U.S. Treasuries, which again are getting eviscerated as the 10-year goes higher, which has been weaponized, which has risen by 500 basis points in a year, which is succumbing to inflation. And because of the weaponization and because of this inflation and ultimately, I guess it's a long shot, but you could even say default risk. And what we did with Russian treasuries is default. I mean, call it what you want, call it sanctioning. It's stealing. We defaulted, and we used it to fund the Ukrainian war. And these are things, they're doing the same thing in the European Union. These are very provocative moves. And so the rest of the world is saying, I don't want to hold treasuries anymore, and I'll buy commodities with it. But they're very shrewd in the way that they do it. They don't buy it the way most people think they should. Just buy it all. Well, then the whole thing blows apart. Instead, they're doing it far more methodical, far more diabolical. They're playing the long game, and every time we're stupid enough to knock it down, they're there with dollars that are losing value and treasuries which are rolling off their balance sheet and using the proceeds to buy things like gold and silver, and boom, it comes right back up again. So it's not going to be straight line, but what we see with Trump is something we should be excited about. We should be happy that they're going to address all of the things that they are addressing, but it doesn't change the fact that one way or the other, whether it's orderly, where Trump were to do all of these things, bring back manufacturing, in order to do that, in order to do the things that he's talking about, we don't have a manufacturing base. We don't have the facilities or the machinery. You'd have to build all that. That takes time. You'd have to train people. All of the things that he wants to do to become more of a protectionist country, if you will, America first, well, that could send us into a Great Depression.
The global financial system is under immense pressure, with geopolitical tensions, economic uncertainties, and shifting power dynamics fueling widespread concerns. Andy Schectman provides a compelling narrative that highlights the significance of gold and silver in these tumultuous times. As the world grapples with these challenges, it becomes increasingly clear that precious metals are not just investments, they are lifelines. The economic environment today is defined by heightened inflation, rising interest rates, and massive debt burdens. The U.S., once a beacon of financial stability, now finds itself in a precarious position. The Congressional Budget Office, CBO, has issued dire warnings, projecting that by 2031, 100% of federal tax revenue will be consumed by interest payments on debt and mandatory entitlement programs such as Social Security and Medicare. This leaves little to no room for discretionary spending, including critical areas like defense. Such an alarming scenario underscores the unsustainability of current fiscal policies. Gold and silver have long been regarded as safe haven assets, offering protection against inflation and economic instability. Schectman emphasizes that the current economic landscape is not just a U.S. phenomenon, but a global one. Central banks worldwide are preparing for a seismic shift. Their unprecedented accumulation of gold, repatriation of reserves, and diversification away from the U.S. dollar all point to an impending realignment in the global financial order. One of the primary drivers of this shift is the weaponization of the U.S. dollar. The freezing of Russian treasury holdings during the Ukraine conflict marked a turning point. This action, perceived by many as a de facto default, has eroded trust in the U.S. financial system. Nations that once relied on the dollar as the world's reserve currency are now exploring alternatives. The result? A growing trend of de-dollarization that is reshaping global trade and finance. Central banks, particularly in countries like China, Russia, and India, are leading the charge in diversifying their reserves. Their massive gold purchases are not speculative moves. They are strategic actions aimed at reducing reliance on the U.S. dollar. For these nations, gold represents stability, security, and sovereignty. It is an asset free from counterparty risk, immune to sanctions, and resilient against inflation. The role of gold as a Tier 1 reserve asset, as reclassified by the Bank for International Settlements, BIS, in 2019, underscores its importance in the current financial ecosystem. Unlike fiat currencies, which can be printed at will, gold's finite supply makes it a reliable store of value. This characteristic has become increasingly crucial as central banks around the world grapple with the consequences of excessive money printing. Silver, often overshadowed by gold, has its own unique set of attributes. While gold is primarily a monetary metal, silver straddles the line between monetary and industrial uses. Its role in emerging technologies, particularly in renewable energy and electric vehicles, is driving robust demand. At the same time, silver's affordability compared to gold makes it an attractive option for individual investors looking to protect their wealth. Schectman highlights the disconnect between the paper and physical markets for precious metals. Futures markets, dominated by speculative trading, often fail to reflect the real demand for gold and silver. This disconnect creates opportunities for savvy investors. When paper prices are manipulated downward, as they often are, it presents a window for buyers to acquire physical metals at a discount. Central banks and institutional investors are quick to capitalize on such opportunities, further reinforcing the long-term value of these assets. The geopolitical landscape adds another layer of complexity. The ongoing war in Ukraine, coupled with U.S.-China tensions, has created a climate of uncertainty. These conflicts have far-reaching implications for global trade and finance. For instance, China's dominance in critical industries, including renewable energy and technology, has positioned it as a key player in the transition away from U.S.-centric trade systems. As the world navigates this period of profound change, the importance of owning tangible assets cannot be overstated. Gold and silver offer a unique combination of stability, security, and growth potential. They are not just hedges against inflation. They are tools for preserving wealth and ensuring financial stability in an uncertain world. Andy Schectman emphasizes the increasing importance of gold and silver amidst global economic instability, geopolitical tensions, and a shifting financial order. The declining trust in U.S. Treasuries driven by inflation, weaponization of the dollar, and growing debt burdens is pushing central banks and nations to diversify into gold. Futures market manipulation creates buying opportunities for physical metals, underscoring their resilience. Silver, with its dual industrial and monetary role, is also poised for significant growth, particularly in green technologies. Schectman argues that gold and silver are not just investments, but essential hedges for preserving wealth and stability in an uncertain world.